The Westpac-Melbourne Institute Index of Consumer Sentiment tumbled by 4.5% in June to 86.4. Now that was a much bigger fall than I was expecting. And indeed now that level is comparable with some of the big periods of economic dislocation that we've seen going back to the early 80s. So the COVID crisis, the global financial crisis, the deep recession of the early 90s, the slowdown in the mid-80s and the recession in the early 80s. The main factor behind the slowdown in confidence is inflation. So 60% of our respondents talked about inflation. Normally 12% talk about it, and 85% of those, not surprisingly, are talking about it unfavourably. Other aspects that affected thinking were interest rates, the domestic economy, and of course the international economy. The labour market still looks strong. Our index for labour market confidence was up a little and is now 16% better than the long run average, but the story on housing was very depressing. 3.1% fall in our index is now a good time to buy a home. 8.4% fall in the question about the outlook for house prices. That index is still 111, so it's still above the point at which we have more optimists than pessimists, but certainly it is falling, and it's fallen by a lot more than that in New South Wales and Victoria. We expect the Reserve Bank to raise interest rates by 0.5% in July, and we expect further increases over the course of this year. But the most important point is what happens to inflation next year. We expect by the end of this year inflation will be 6.6%, but by the end of next year it'll be around 3%. And the key factors behind that will be a fall in petrol prices, much weaker growth in electricity prices and cost of building materials, and lower growth in food. So these are all supply shocks that as the economy slows down, we expect the inflation pressures to ease. But don't overlook the fact that next year will be a weak year for the economy, expecting only about 2% growth next year compared to 4% growth this year.